Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
We know the secretary's listening. Secretary Bessent, after his interview with Marie, he's probably, tuning in here. And he's tuning in for Adam Posen with the Peterson Institute for International Economics, truly one of our great economists, noticing that Philadelphia won last night.
Okay.
Bases loaded.
I saw that.
10th inning catcher.
Interference.
Interference.
You don't see
it's
that
like,
every day.
It's like terrible. Adam Posen with us this morning. Adam, my book of the summer is Ken Rogoff's Our Dollar, Your Problem. I read the footnotes. I'm that much of a nerd. And back in the footnotes, they mentioned Alwyn Young of LSE. Adam Posen is mentioned as well. And sandwiched in there, Adam, as you know, is Paul Krugman's 1994 Jewel on the myth of the Asian miracle. If you were speaking with Secretary of the Treasury Bessent now, as he meets with the Chinese Monday in Stockholm, what is the myth of China that he needs to know about?
Thanks for having me, Tom. And of course, I follow you, so I saw you made Ken's book the book of the summer. Good call. I think the myth that Alwyn Young and Paul Krugman and others put out, which was right, which is you don't get self-perpetuating growth, you don't get trend productivity growth improvements just through throwing more capital, that you have to actually innovate. And so this has been an issue for China, not because they don't innovate, the private sector does clearly, but that they keep deciding to throw huge amounts of money into the state-owned enterprise sector, into industries of yesterday. It doesn't solve Secretary Bessent and the US's issue with China because, again, there is a fundamental competitiveness of a lot of the Chinese economy, and then disputes about their treatment of intellectual property rights, their treatment of dumping, of subsidies. But the fundamental point, which my colleague Nick Lardy also used to make in China, is that there is still a huge divide between the public sector and the private sector use of capital in China.
Adam Posen, I was going to mention Nick Lardy with real authoritative decades of perspective on China. Do we want those jobs back? Does the Peterson Institute see any evidence that we want the quote unquote manufacturing jobs of China back in America?
Depends which ones. Talk about Krugman. Krugman and Laura Tyson were debating 35 years ago industrial policy, right? And so-called strategic trade policy. And long through the years, what's come out is you want to be realistic about what jobs you can get. You want jobs that are relatively well paid for the level of development your economy's at. And as people rightly made fun of Secretary Lutnick talking about, we don't want US people screwing little screws into the backs of iPhones. That's not what the US should be doing. We don't really want US people doing things that can easily be substituted for by robots and mechanization. There are some manufacturing jobs that would be nice to have. But as another colleague of mine, Robert Lawrence, who you know well, has argued, there's a real limit, given technology, given international markets, given declining demand for, in money terms, for manufactured goods, how many of these manufacturing jobs you can create. And so that ultimately is the crazy thing about all this. If you go through turning the whole US economy upside down, you're going to change the labor force by 1.5% at most, which is a lot in human terms, but is a very small amount in the economy. That doesn't say we shouldn't worry about concentration risk and national security risk on the manufacturing side. That's a different argument. But the jobs idea, there's just fundamental limits. You're not going to create enough good jobs, as they're called, through this kind of policy.
Adam, what do we make of the U.S. dollar here? It's still down 9-10% versus its high from earlier this year. When most risk assets, whether you look at the S&P 500, they bounce back and are setting new highs. What's going on with the U.S. dollar, in your opinion?
You're right to point out the divergence, but I think there's a reasonably clear explanation. So as I know you were aware, Paul, the tick data, the Treasury International, whatever it's called, data shows that there's been big inflows into the US. What seems to be happening is a lot of long money managers, including sovereign wealth funds, including central bank and government reserve managers, but also pension funds, insurance companies, are smartly repricing risk on the US, both because the US is providing less credible insurance than it used to in various ways, and because the fiscal path is now noticeably worse. And so they're hedging. They're paying for hedges on the dollar in a way that they rarely have for the last 20, 30 years. And that's more easily expressed through the currency markets than through equities or bonds. And so to me, we're seeing a genuine move against the dollar on fundamentals. And we're seeing that in, as many people have documented, including my colleague Maury Obsfeld, including Ellen Ray at London Business School, that we got this, and you've spoken about, we've got this now kind of EM dynamic when bad news hits in the US, intraday, intra-week, interest rates go up and dollar goes down, as opposed to usually for the last 20, 30 years, when bad news hits, interest rates go up and dollar goes up because there's flight to the US. So there isn't a contradiction. There is an expression of non-zero risk on US assets that has to be hedged, and that's showing up in dollars, in currency, excuse me.
Is there a risk that the dollar loses its position as reserve currency in the global economy?
No, but I think dollar loses its centrality. So let me parse the words carefully. Reserve currency status doesn't have to be only one. The historian Barry Eichengreen has documented this. Mark Flandreau and others have documented this. Basically, the attribute of reserve currency is that you can issue your public debt in your own currency. And secondarily, that at least some of the time when there's a panic, people come to it. That latter part, as I just said, is weakening some, but the U.S. is going to continue to be able to issue debt in its own currency at higher interest rates, but it will be able to. Right. But I and Maury and Marcus Brunnermeier and Warren Kibben, a bunch of us are talking about decentering of the dollar, that the dollar is being massively overweight in reserve portfolios, in transactions, in payment systems, in currency pegs. Right. All of that, I think, is potentially starting to be unwound. I don't think it's all going to go away by any means, but I do think there is a meaningful shift.
With us, Adam Posen of the Peterson Institute in Washington, and we welcome all of you on your commute across the nation this morning. Good morning, 99.1 FM in Washington, Nathan Hager Radio, 92.9 in Boston and Brookline, and of course, Bloomberg 1130 here in New York. On YouTube, it is a digital experiment growing each and every day. The best way is to subscribe to Bloomberg Podcast. Anticipated is September 19th of this autumn, where there will be a wonderful, I guess, virtual moment for Adam Posen at the Peterson Institute with Jason Furman and Kenneth Rogoff. And what's so important about this, it's in honor of Richard N. Cooper, who was at Harvard for years and synthesized our economics together. Adam Posen, get out front of the September 19th date. How do we synthesize the American turmoil now into 2026?
Thank you for mentioning our third annual Richard N. Cooper Memorial Lecture, which his family has paid for at the Institute. And we're very proud to have Ken Rogoff being this year's lecturer and Jason Furman, his Harvard colleague, chair. To synthesize it, Tom, I have an article forthcoming at Foreign Affairs, which I know you read, talking about the fact that the change in the regime from the Trump administration is very real, in the sense, building on what I was just saying with the dollar, in the sense that the Trump administration is not just renegotiating the pricing of the public goods that it provides the rest of the world. It is fundamentally altering the credibility of the promises, the reliability, the nature of the relationship that the U.S. has economically with other countries. And as a result, as we just spoke about, repricing of risk on dollar assets, including treasuries, I think that a bunch of countries, a bunch of companies, a bunch of investors are reallocating. And you mentioned Dick Cooper, and the book that I first knew about from Dick Cooper was his 1968 book, The Economics of Interdependence. That ahead of everybody else, he said, look, the U.S. has to reckon with the fact that other economies are interdependent with us. They're dependent on us, we're dependent on them. And we have to figure out how to balance that and work that. And the Trump administration, as far as I can tell from all their policies since retaking office, is basically saying wherever we're dominant in an immediate sense, where we're less dependent than they are, we will try to extract as much as possible.
Because of time, Adam, because of time, this is so important what we're talking about here. Folks, beyond Trump, and I go to Secretary Lutnick talking yesterday, the certitude of a unilateral power of America. Do you think we get back to traditional American interdependency after Trump? Or is this a one-off and permanent change for generations?
I think it's somewhere in between. I think just as with the alliance relationships in Europe, as Corey Shockey has spoken about, that there are some fundamental changes, tearing up of trust that will take a generation to rebuild. But I also think that this set of policies is going to blow up, unfortunately, for the U.S. over the next few years. Whether it's 2 years or 6 years, I unfortunately can't say. But it's going to blow up. And presumably at that point, just as after Herbert Hoover and Andrew Mellon in the 30s, there was a reckoning. I hate the combination of foreign and economic policies that are being pursued. I use the term hate because I think it combines bad policymaking, bad impact with bad values. And I am hopeful, just as the U.S. found its way in the 40s and 50s to a more constructive engagement with the rest of the world, or more realistic in its own self-interest, frankly, that the U.S. will do so again. But I'm also advocating and hoping and engaging that the rest of the world can create and maintain things that without the U.S. and China.
Yeah, Paul, jump in here, please.
Real quickly, so Adam, just to put a bow on that, is internationalism, at least for the near term, globalization, is that over?
No, Paul. I think it's corroded. Okay. I think the U.S. aspects of globalization are definitely in retreat, but you can see ASEAN and CPTPP, the various arrangements in Asia, deepening and expanding. You can see the EU stepping up, not as much as perhaps the moment calls for, but much more than in the past, and integrating slightly more. You can see Brazil and India and Turkey, the major emerging markets, and Indonesia pursuing, again, a mix of good and bad policies, but still fundamentally pro-globalization. The world goes on, but it is a more rugged world after the seismic shock from Trump. It is a world where the roads are less good, and some of it has to be rebuilt.
Adam Posen, thank you so much. Greatly appreciated. Anticipating his effort for foreign affairs coming out in the coming weeks.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
Libby Cantrill is with PIMCO, and is looking at Washington policy. Libby, there's a point, I remember a book of the summer 10 years ago was one volume on John Hay. It was absolutely superb. And before air conditioning, it was how Washington came to a complete total halt in July. Is there a summerness to your Washington, D.C.?
I mean, there typically is. I think we all kind of wait with bated breath usually for the August recess. Tom, though, I think that this president has proved that regardless if Congress is in session or not, there are still many headlines and subsequent market reactions to those headlines in Washington, regardless if Congress is in. So I'm not sure it will make that much of a difference this year, but usually it is a time where people do go on vacation and enjoy the respite before what usually is a busy fall in Congress.
Can Fed Chairman Jay Powell, is he going to be able to enjoy the rest of this summer into the fall here? How do you view that whole process, that issue?
Yeah, I mean, it's, I think, our view, I think very much like Stephanie's, is that that Fed Chair Powell is going to stay the course. We do not think that it is likely that he either resigns or that President Trump actually fires him for a variety of reasons, most of which is self-defeating for the president. We do not think it's the lower interest rates. We think it also make it much harder for him to confirm basically anybody that he wants, particularly a more dovish person. So I think that Jay Powell probably will not be resting as much as he would want to in August. But again, I think we agree with Stephanie that he's not going anywhere. He will stay the course.
Libby, synthesize your work on political economics and the politics of Washington into the world of PIMCO. We're hearing in the zeitgeist a more constructive tone, as we just heard from Ms. Roth of Wolf Research, a more constructive summer, a more constructive Q3. OMG, we're going to survive tariffs. Fold that into the bond market and what yield would do. Does that get us back on a disinflationary vector of low yields? Or do we have stimulus that gives us stable yields or higher yields?
Yeah, we've been saying now for about a year that our view has been that you'll most likely get a steeper curve, whether that is sort of a bear steepening or a bull steepening. You could basically get both, right? Where you have more term premium at the long end of the curve as investors like PIMCO require more yield to invest in longer term paper. But at the same time, you also expect the Fed to likely cut, and that is our view. We do think that you may get more term premium at the end as folks do get increasingly concerned about the deficit situation, about potentially the independence of the Fed. But at the same time, that the economy is decelerating. And, you may see a little bit of stimulus from the tax bill. I'm not sure that's really been sufficiently reported, just in terms of some of the retroactive tax provisions that were retroactive to the beginning of 2025. That means just the bottom line here is that consumers will actually be getting some nice tax refunds in the beginning of next year, but also businesses will be able to take advantage of some of these new business tax provisions starting kind of, in the fall, most likely. So you could see some, marginal fiscal stimulus. We're penciling in about 0.5 point over the next 12 months from the tax bill. With that said, the tariffs are still in place. And we continue to believe, and maybe we're in the minority here, that the president is not, tacoing, if you will, on tariffs. He really believes this. He believes this is an opportunity to really remake the global trading order. And I think it would be sort of foolish, honestly, to not take him seriously that higher tariffs are likely coming. Regardless, though, Tom, this is important, is that the tariff rate is already high. We're assuming that the tariff rate is about 13-14%. And again, will likely go higher, even if you don't see these reciprocal tariffs going on August 1st.
Paul, I can't get my head around that. I'm still,
no.
And frankly, I've heard 13, I've heard 15,
I've heard 20.
Give me 7 other numbers.
Yeah, I know.
We are so far from 3.
So far from 3. And the question obviously is how much will corporates take it in their margin versus pass it along to consumers. So, Libby, I also want to look a smidge forward here to September when our esteemed Congress returns in September. They got to pass some legislation to keep the government open, don't they?
Yes, as a reminder, in the tax bill, which I think we all welcomed in the bond market, they did address the debt ceiling. So the debt ceiling is usually that is a, because of a big, crisis, or at least momentarily a crisis for the bond market. We're not going to see that. The debt ceiling has now been increased, likely to beyond 2028, if not even further, or 2027, if not further. But we do still need Congress to fund the government to avert a shutdown. The deadline is September 30th. They haven't made a lot of progress. We could see a government shutdown. I'm not sure if it's a real market event, but clearly if the market is already feeling if they're already on edge, or if they will be on edge in September, this could sort of exacerbate that.
I got a note here, not a hate. I do get the hate mail. Michael Barr gets all the love notes, but Libby Cantrill, is the basic tone of the American zeitgeist that we're prospering in a prosperous America, and that with all this legislation, all of the administration's work, all of our work, we're leaving behind a huge part of America? Is that the backstory of this 2025?
I'm not exactly sure what you mean by that.
No, but we're leaving behind. I'm getting notes from people saying all your fancy people, all your fancy guests are talking about an America that's employed, prosperous, in the stock market, whatever, in the bond market with PIMCO funds. The fact is we're leaving a whole hunk of America behind, right?
Yeah, no, I think that's absolutely right. And I mean, this is part of the reason why I think the majority of Americans elected President Trump, is that they did feel like the sort of the establishment, that the elites, the Bloomberg elites, if you will, Tom, we're leaving the kind of the working, person behind. I'm not sure if those folks feel like that the Trump administration, at least yet, have addressed some of those concerns, particularly around cost of living. I mean, these are all, kitchen table issues. These are still the most important for voters. And that doesn't seem to have gone away. If you just look, at least at the polling, take that with a grain of salt.
Nicely put. Libby, thank you so much. Libby Cantrill with PIMCO with us this morning.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
It is a single sentence at the end of his report. Ian White is with Huntington Bank with a perspective different than 3 zip codes in Manhattan. The Southeast is outperforming northern states for total spending growth, partly reflecting a growing younger population. Give us a Huntington Bank anecdote how the Ute from the Northeast are going south.
I mean, look at Charlotte. I'm based there. You can see tons of New York bankers ended up there having kids. It's huge banking center right now. And we're seeing across the Southeast and Texas, of course, just remarkable growth. That's part of why, we made an acquisition in Veritex in Dallas, leaning into the demographic trends. Dallas blows my mind numbers wise. If you look at the census data from the estimates for population since 2020 through 24, Dallas added about 670,000 people. So Texas added the most people, Florida the second most, North Carolina was third in terms of population growth. North Carolina only added 590,000 people. So Dallas added Washington, D.C.
That's great. I love that. Dallas added Washington, D.C. It's too good to be true. What's the worry? What's the constraint on this great migration?
Definitely cost is becoming more of an issue. You look at housing costs in a lot of these cities that were pretty affordable. You've seen that really go up. Now in recent months, we've seen a bit of a pullback in home prices there, especially in desirable areas near core. You have seen run up where the affordability gap isn't quite as strong as it once was. So we are a bit concerned about that. For somewhere like the Carolinas, where we're growing organically, at Huntington, we've recently started opening branches, and we opened commercial offices in all 6 major metro areas across both Carolinas. What's interesting there is every metro almost has a different economic model. And so you have probably 6 distinct economic models you can look across the 6 big metro areas there. So each one has a different thing driving its growth, but it is generally, business-friendly climate. People want to live there. And the reality is companies right now in an environment where labor force isn't growing, the 25 to 54-year-old population is basically flat in the United States, especially with lower immigration. Companies are going to follow workers, and they're following where they want to live. And Texas continues to attract them in just unbelievable numbers, and the Carolinas are also doing very well as well.
All right, let's step back. What's your view overall of just kind of this U.S. economy? I don't know if you lead with the labor market, you lead with the consumer. I mean, we know everything's great down in the Carolinas and Texas. We get that. It's been that way actually my entire career, quite frankly. Broader speaking, how are you guys thinking about things? What are you hearing from your clients?
We see it as clients still see a somewhat conservative consumer who's not making huge purchases. They're a little hesitant on debt finance purchases. If you talk about, we have a large business in RV floor plan lending, boats, marine, jet skis, all those things. Okay. Yeah, we do.
Vespa scooters.
Yeah. Yep. So, Sea-Doo or something like that. We'll do a lot of their dealers. We have relationships there where we do a lot of the dealerships. And you still see that consumer who's debt financed is a little hesitant. They're that lower end product. The higher end product, the consumer who's, selling equity, near retirement, they may have had that conversation, back in December with their advisor, where they have that annual review, and they say, how much money do you want to die with? Have some fun with it, enjoy it. You're doing pretty well. And so we still see that consumer, I think, is the base of the U.S. economy right now, and really what's driving growth. They're the ones who refinanced in 21. They're the ones who inflation hasn't affected them very much. So
if Michael Barr finances his Spark Trick Sea-Doo at $9,199, he can get financing from you?
It's more we've probably financed his dealer. Is where now we can do the financing on that too. But his dealer's floor plan facility, we probably have a relationship with Bombardier Recreation Products.
What are you hearing from your clients in the Midwest where hunting started? Yeah. What are they telling you these days? Again, we know the Southeast is kind of booming, but you guys are hunting Columbus, Ohio, big Midwest presence historically. What are they telling you?
I'd say a couple things. One, definitely trying to pull back the supply chain to the United States is a real thing that's happening. Okay. And it really depends on the industry whether they think it's going to happen. I talked to a company in building products, and they just said, look, the entire supply chain for our entire industry, soup to nuts, is in one province in China. And we just don't know if we can move it at all. So we're going to have to deal with the tariffs and figure out ways just to manage it.
When do you think that'll be quickly here? Is there a timeline you have where we rationalize one province in China?
I don't know. I think it really depends product to product. Autos, it's definitely coming back. There's definitely moves to get more parts made here, more things made here. We're hearing that. In terms of the Midwest, I also think there's a little bit of a growth split where we're seeing better data for, say, anything south of the Great Lakes. So in Indianapolis, if you look at their job growth data, it's basically been a Sunbelt market since 2020. Columbus is doing a bit better. Cincinnati's doing a bit better. So you kind of have that strength in the southern half of our footprint, that you're a little stronger. Overall, though, I also, we probably have seen a little stronger consumer spending growth in the Southeast and the South when you look at the real-time spending data.
Ian Watt, thank you so much. With Huntington Bank, their review to the Southeast.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
In honor of this Bitcoin discussion, I went back to where the trend happened in Bitcoin 2015. And Paul, I did a log linear extrapolation of BitDog, and I can assure you in the late summer of 2028, Bitcoin will be worth $1 million per Bitcoin. So there you go with the velocity of the lift in Bitcoin.
Got Bitcoin sitting right here at $119,000, even just an extraordinary run here. Ayesha Kiani joins us. She's the COO of MNNC Group, also over there at a professor at NYU, little college downtown Manhattan. Ayesha, what is the theme around crypto these days? Is it the fact that we have an administration now that seems to be embracing crypto broadly defined? Is that kind of the main narrative here?
I think the main narrative is that there's no stopping us anymore, right?
Oh boy.
So I know we have basically been unleashed. And so number one driving force is obviously the ETFs inflows, right? 3.1 in Bitcoin, 3.4 or 5 in Ethereum billion just in like last week, right? The other thing is that the pro-legislative action on Genius Bill, which is the Stablecoin Act, right?
And what does that act say? What does it do?
The act says that if you're a bank or if you're a company, you are authorized to create your own stable coin backed by the US dollar.
Okay.
So if you're going to create 10 stable coins, you have to have $10 in your bank.
That seems like something that even a Jamie Dimon could get behind.
And he has been getting behind. Citibank has been getting behind. We are seeing a lot of action on the banking side, where every bank is either
Right.
sorry.
No, I don't mean to interrupt. I'm listening, frankly.
So basically, every bank is very much interested in coming up with their own stablecoin.
Is the underlying changed on Bitcoin from when it was 40,000 or 4,000? Is it a new Bitcoin, or is it the same old Bitcoin it was 7 years ago?
It's the same old Bitcoin. It's the same old cold. It's the same old mining process. It's the same miners. U.S. has just grown in concentration in mining that Bitcoin from 7 years ago.
Can you state that Gary Gensler allowed for the lift in Bitcoin by opening it up to people like BlackRock?
Yes, he did, right? He opened up a different market, but I think more than him, it's the current administration, because with previous administration, especially with Gary Gensler and SEC, we struggled in defining digital assets. But we're finally at that point where the conversations have become very easy to say that, look, this is a digital asset, this is a digital security, this is just a coin that just needs to exist to prove the blockchain. And SEC and CFTC have come forward very welcoming in understanding on all of these terminologies.
When you lecture at NYU, can you suggest that it's being used less for criminal activity worldwide?
Sure. So we have companies like TRM, Chain Analysis, Elliptic, that basically monitor these transactions, right? Number one. Number two thing is, when we're working with companies like Cantor or, Goldman Sachs or Guggenheim of the world, they would want funds like us to have such monitoring infrastructure in place, which these companies provide. And yes, so it is very much used very less for illicit activity now, because all of it is very traceable. And I teach my students this. I was like, guys, if tomorrow you think you can hide one Bitcoin to, for an illicit purposes, this is how I'm going to find you.
So on the Bloomberg terminal, for those folks on the Bloomberg terminal, Bloomberg Intelligence covers the crypto space across the board. BI space CRYP. Crypt will get you all the research and all the data you need there. So Aisha, what's the talk now in the crypto space? For people like Tom and I, it's kind of Bitcoin, and we quote Bitcoin.
Yeah.
And that's about it. How is the crypto space evolving? Where's the next 1 to 2 to 3 years for crypto, broadly defined?
So when you're covering Bitcoin, right, you're basically covering the entire representation of digital assets, because Bitcoin is our real representation. Some people may disagree with that. But where 3 to 4 years we're headed is stable coins, right? You're standing at Starbucks, you're transacting in your stable. You don't have to do it with your credit card. We're seeing also MasterCard working with their own crypto infra rail to basically provide solutions. So there's no buybacks, right? One thing that crypto provides is absolute finality in their transaction. There's not going to be any buybacks or there's not going to be any cancellations on credit cards, right? So in Starbucks, right, you're like, hey, here's 5 USDC or 5 US, MasterCard, see you tomorrow. That's where we're headed.
Don't be a stranger. I got 18 more questions. Thank you. So it's Aisha Carey with us with NYU, where she teaches on Bitcoin, a whole resume of accomplishments.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Good morning, everyone. Paul Sweeney and Tom Keene here, getting you through a July week. Lots of interesting cross currents here. And of course, the diversion of the newspapers up all night in at 3 a.m. to give us some choice morsels. Lisa Mateo, what do you have?
All right. We've been talking a lot about the affordability crisis in New York City, right? But now it's expanding to a new area. And the New York Times points out animal shelters, because they say that a lot of New Yorkers have been turning in their pets because they can't afford to keep them, right? They either lost their housing, or maybe they have to move to a new place that doesn't allow pets, or maybe they just can't afford to feed them because you guys know it's expensive, right, to have a pet. So what they're saying is that the shelters don't have room, so a lot of them are being turned away, a lot of the animals. There are 2 new animal shelters under construction in the Bronx and Brooklyn, but they're not opening until next year. But they're saying this is just a growing problem. They have some pets that are like in one cage together, and they're just running out of space. So that's the issue here in New
And
York
off of
City.
COVID, everybody had to get a pet during COVID. It made sense.
Of course. I was this close to getting a pet during COVID.
Paul, would you like to talk about Up All Night with Pets?
Yeah, Up All Night with Seamus. Yeah.
Have we enjoyed the first vet bill?
Oh, yeah, of course. Yeah. And
It's
so
like going to the
shots,
pediatrician, just worse.
Exactly.
Next.
So.
Okay, this is something that we were actually just talking about in the last segment for Bitcoin. A new sign that the biggest banks are endorsing this move to digital assets into the mainstream. So sources are telling the Financial Times JPMorgan Chase is exploring lending against clients' cryptocurrency holdings. And it's a big shift because Jamie Dimon, a few years ago, he said Bitcoin was a fraud. So they say they could start lending directly against crypto assets like Bitcoin, Ethereum as soon as next year. Plans could change. JPMorgan didn't want to comment on this, but it's out there. And they're saying, Dimon's earlier comments about Bitcoin, the problem is that it alienated some possible clients who either made money through crypto or maybe, of different legislation, because you talked about stable coins, in the last segment as well. So that was another point of it. But it's already taken some steps. Remember, we talked about plans to begin lending against holdings in crypto ETFs for JP Morgan. So this is just another step in that. But we'll see, what happens.
Yeah. Well, to me, the creation of the ETFs for crypto was really a validating event for me, at least, in just in terms of global Wall Street and its embrace of crypto, because it just made it more accessible to individual investors. Right. So here's JPMorgan Chase. Again, you mentioned Jamie Dimon, arguably the highest profile, I guess, I'm not going to say critic maybe just doubter. I don't know. He seems to be changing his tone there.
Oh,
there's
Lisa,
the cork.
Thank you for putting the cork in my mouth.
Yep.
You're welcome.
Meredith thinks that's funny in the control room.
Of course it is.
It's good to see 1 out of 5 is awake in the control room this morning. Thank you for that, Meredith.
The surveillance cork is always on hand. Okay, I want to pull an audible here, and I'm going to that independent article from earlier about cane sugar in Coke. Okay, so this is debate, right? Cane sugar versus corn syrup, because Coke is now saying it wants to launch this new Coke made with cane sugar this fall. Yeah. So Coke in the U.S., here's the difference. It's made with high fructose corn syrup, right? Which is made from cornstarch. Like I was talking earlier, corn has been cheaper than cane sugar, so that was a reason. Cane sugar is made from sugar cane, the long, sticks, the bamboo things. It's used as a sweetener in Coke in most other countries. So that's the difference between us and other countries. Which one is healthier? That's the debate. I mean, experts are saying corn syrup has a little bit more fructose and table sugar, but cane sugar, not necessarily healthier. I mean, it's not. The main difference is like a molecular structure. I'm not getting into that.
Isn't there a different Coke recipe in Mexico? Isn't Mexican Coke different? Like you go to like a Chipotle and they have like...
Well, they have the high fructose corn syrup, but I don't know if it's the recipe is actually different. I don't know.
I'm learning all about this stuff.
Could be.
I've been drinking Coke my whole life. What do I know?
But the main thing is that added sugar, right? Soda has more than a daily recommended added sugar. If I'm looking at a label, I'm always go to the added sugars first to see how much extra is in there. So they're saying soda is soda.
Do you? I don't go to labels.
I do.
The authoritative view of Lisa Mateo. Lisa Mateo in the newspapers. Thank you so much.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.